Good day, ladies and gentlemen, and welcome to the show. Glad to have you guys here. Now, I'm going to tell you guys what I'm a little bit violet. What it is I changed the background color on my behind me, and I got to change it back again. I got to go in and get some poster board or something and change the color back again to get rid of this violet color. It's a little bit wrong color green or something. It did something to my camera. I can't seem to fix it on the camera. So I figure going back to that old color again will make me back normal color again. Anyway, so you gotta have to put up with it for a little bit until I can get in and get some poster board, maybe at Walmart. Anyway, let's get started. Let's open the charts right here and take a look at what's going on. Now I want to talk about the silver price today. Over the course of this year, the rest of this year, I am quite literally expecting the silver price to double from where it is right now. And I have reasons why I say that. One of the reasons why, big reasons why, is got to do with supply issues. It's coming. There's already been a lot of hints out there that they do not have enough of the big 1,000-ounce bars to cover industry and ever increasing bar and coin demand. And now that we're going into the acceleration phase, we've entered into it. We've just started to enter into the front side of the acceleration phase. There's going to be more not industrial demand, but bar and coin demand is going to probably increase. As people see the inflation, actually see it, and consumer price inflation, it starts to increase. Now, back about maybe 6 months ago or whatever, I was forecasting an economic recovery when everybody else was forecasting a 30-year Great Depression. Okay, and I was saying recovery and they were saying depression. Well, we're going into the front side of the recovery now, and we're also entering into the front side of what's called the acceleration phase. What the acceleration phase is the velocity of money starts to tick up. You see a lot of spending going on. You see you see an economy that's starting to pick up. And this is what is demand. It creates a tremendous demand. And at the same time, you've got a limited amount of supply coming in from it doesn't matter what you want to buy on Amazon. It's flying off the shelves right now. Restaurants, the ones that are still open, they might have a lineup, stores and everything. It's just right now we're getting this vibrancy that's coming as relief as the virus is picking up and starting to move away. And this is going to increase as we move into the summer. Enjoy this year, the rest of this year. Really enjoy it. I think we're going to have a great Christmas this year, not like last year. But I know you guys hate to hear the word but. We got something monumental coming down the pike, and it's called hyperinflation. When the acceleration phase ends, we enter into the hyperinflation. I'm expecting the acceleration phase to probably last about a year, and it's going to feel good because money's starting to flow through the system again, big time. I predicted this. I also am predicting what's coming next. Now, when these other guys are predicting a 30-year Great Depression and I was predicting a recovery, now I'm right on track for the recovery. How much do you want to bet that I'm right, too, about the hyperinflation that's coming in about a year from now, or a little bit more than a year from now? That's going to be the major disruption, is the hyperinflation when it gets here. But don't worry about it too much until it gets here. Prepare for it. Enjoy your time. Enjoy your summer we got coming. Enjoy your fall. Have your barbecues. Have fun and everything else. But in the back of your mind, remember, next year, probably toward the end of next year, probably the second and third quarter, we're going to have our start to move into our hyperinflation. Things are going to get really bad, and you need to prepare for that. But you don't need to go out in a mad rush or anything, just have it in the back of your mind that it's there, and you got a little bit over a year to prepare for it. It's going to be bad. It's not going to be pretty. The hyperinflation itself. The hyperinflation is when you're really going to see the price explode on things like cryptocurrencies, gold, silver. They're gonna take a moonshot that's absolutely unbelievable, a hyperinflationary moonshot. The problem is getting out. Exit strategies. Because you're not going to want to exit into a currency that's gone its way to zero. So how do you get out? Well, the answer to that is maybe you don't. Maybe this is the rally coming in silver and in gold and in cryptocurrencies where you don't have an exit, where there is no exit. You have to keep them as your store of value and as their money. Because this, what we call money, this currency that we call money, is not really money. Real money is gold, silver, and cryptocurrencies. That's money. This other stuff is like, it's like feathers in the air. I mean, it's just like, anyway, let's take a look at the silver price here, and what we're seeing is $24.88 for silver. It's down 4 cents on the day. But like I say, I'm expecting this to double in the next year. This year, I'm expecting this to double in price. Because there's going to be a very, very difficult time for them to keep supplies coming for industry and to cover bar and coin demand that's ever increasing. It's going to be harder and harder when it comes to silver for them to cover both of those bases. And I don't think they're going to be able to do it ultimately at some point this year. So, me saying that the price will double this year, that's what I think. That's my personal opinion. It might be extremely conservative, considering what's going on. Okay, cryptocurrency today. We're looking at 1,972 billions. Now, we're almost $2 trillion. How long did it take us to get the first trillion in the industry? Well, it took us from 2009 until just very recently to get the first trillion. How long has it taken us to get the second trillion? You can count it in weeks. So this thing's going hyperbolic, cryptocurrency. And we're not at the end of the run yet, because I'll tell you what, when you see the Bitcoin price is not rising, but you see the market cap going up, we're mid-rally. So we're mid-rally right now. Right in the thick of it right now, with the altcoins causing the market cap to go up, but not Bitcoin. That means what we're seeing is the Bitcoin ratio, altcoin ratio, the Bitcoin dropping, right? When you see that go back up, we're near the end of the rally. When you see Bitcoin starting to, and that means that they're starting to sell off their altcoins and they're starting to buy Bitcoin for protection. When you see that happen, we're getting near the end of the rally. We're not there yet. They're still buying in big time to the alts. And when they're doing that, it means we're mid-rally. Okay, let's take a look at Dow Jones Industrial Average today. We're looking at 33,501. It's up 1% on the day. 348 points to the upside. It doesn't surprise me a bit. This rally in the Dow can continue as long as we're going into this acceleration phase, and as we go into the hyperinflation, it could go to the moon, the stock market. But it's going to be priced in dollars. This is the problem. A trillion times zero is still zero. Anyway, let's take a look at oil today. 59.85. It's down $1.60. There's two things that concern me that can throw a monkey wrench into our recovery. But I don't think either one of them are going to happen. One would be a sudden severe drop in the oil price. I could throw a monkey wrench into our recovery. The second thing would be the bonds. And we're getting to the bonds here at 63.71 for the MOVE index. So we're not going to pay too much attention to that today. We're going to move right here, right into the bonds. And what we're seeing today in the treasuries is we're seeing the yields falling on the 10-year. It's 1.72. It's rising a little bit on the 30-year, but the moves today are insignificant. 2.37 on the 30-year. This is the other thing that can throw, and this is the biggest thing that can throw a monkey wrench into the economic recovery, is these bond yields. But again, I'm not expecting them to let these yields rise too high. The Fed. And they've said that they're not going to let them. You gotta have a little bit of faith in what the Fed says. They have so much power, it's unbelievable. And you know, I think they probably got a marker on these treasuries, how high they're going to let them go. And I really don't think they're going to let the U.S. 10-year drift too much above 2%. You know, they probably have a marker rate at 2%. I wouldn't be a bit surprised if their marker is 2%, right on the money, you know. Let's take a look at the U.S. dollar index today. 92.6, and the dollar is falling really fast today. We got a fallen dollar today. It's fell almost a half a penny today. 0.41%. 92.61. Looks like it's falling real fast. Gold and silver should be going in the opposite direction. When the dollar falls, typically gold and silver goes up. When the dollar goes up, gold and silver go down. That's typical, you know. Thank you guys for listening to my show. Like and subscribe. And we'll catch you guys in the very next episode. Bye-bye.